struggle, stories of life.
Hey, everybody. Welcome back into Let's Talk Local. I'm Deke Jones. And of course, this guy over here, Mr. Tim Paul. You're blessed to have two hosts. That's how good this show is.
It's a double hosted.
Yeah, double hoster. Because that's how good this show is. So we're excited today. We've got Raymond Lavine from Lavine LTC Insurance, long-term care benefits advisor.
Yes.
And the reason that I love this, of course, myself being in the insurance space with health markets, but the need for this, I think it's something that's very misunderstood, Tim. But it's something that's need. It's a huge need.
It's a very huge need, and I think it's something that everybody probably wants to look into, and it's one of those things that's real easy to put off.
Hey.
Us being one of them.
That's right.
It's real easy to put off and say, well, I'll think about that later.
Yeah.
But by the time you need it, it's a little too late to do that. Yeah.
Then it's not really long term.
No, then it's short term, long term. Yeah.
That's right. Hey, but without further ado, let's bring Raymond
him aboard.
Yeah. Hey, Raymond, welcome in.
Good morning, Washington State time. Good afternoon, Illinois time. And also, let me just say, you said everything that I wanted to say. Can I go home now?
That's it. Thanks for tuning in, everybody.
Yep. Great show.
You both said what I wanted to say so eloquently. I have no other thoughts. I have nothing else to offer.
There we go.
First time anybody ever said we said anything eloquently. Yeah. Right. Appreciate that.
That's right.
My pleasure.
It might be the time zone.
It could be.
I don't know. So, Raymond, welcome in. Let people kind of know who you are, how they can get a hold of you after this show, if you got a website, those type of things. And then that way, if there are further questions after the show, people can reach out to you.
Well, there are two ways. The first is if you want to have a real two-way conversation, my phone number is area code 253-275-6091. Now, I'm Washington State. However, it does take voicemail, and I have an outgoing message. Hey. The other way is to go to my website, which is www.lavineltcins.com. But there's more. Is that when you go to most websites, it has whatever it is we want to talk about. But there are two things that I would suggest. The first is if you go to the upper left of the website, you can put your lifestyle, and it'll give you an idea, visual of when it's possible you may need caregiving, and I'll also say what the cost of caregiving is and how much you may have in personal assets or what you may need to make up. But there's more. If you go to the lower right of the website, rather than the 46 frequently asked questions that usually are in a website for whatever, and I have a little bit of that. What you can do is you can put in, the usually, how much does it cost? But you can even put in who's Raymond Lavine and get an idea of, who I am. So those are the two ways that you can contact me if you find this wonderful program worthwhile, or if you think that having the conversation with me would be of value.
That's awesome. And of course, I Chicago'd it by saying Lavine.
Lavine instead of Lavine.
Let's say Lavine. So we're good. So tell us a little bit.
You are redeemed. Or is it absolved?
I don't know if it's absolved. I'll ask my wife later.
Or admonished.
Admonished, maybe. So tell us a little bit about. Before we jump into long-term care benefits, tell us a little bit about your passion behind it and why you wanted to jump into that space. So a little bit of your story.
It began at an early age. Most people, when they think about caregiving, none of us take a class in this. In fact, for parenting, generally, you don't have a class in parenting. And when you think of caregiving, you always think of old people like me that say, that they'll need caregiving. But caregiving is everywhere at every age. in many family situations. Caregiving is about helping somebody else, your children, your friends, your family. That's really what caregiving is about. So I think I've always had an empathy about that. But in my personal family, my father several times needed very long-term care giving. He was in a major car accident and broke his back. He had, and then years later, he fell off a horse because of his back injury and broke his hip and his arm. And it was really bad. And then he was out for about a year and a half. And then the last couple times is because he had a major heart attack, which eventually he died from. But so, personally, I've had that. My wife's parents had both Alzheimer's or, cognitive and cancer. So, but, we also know people that even at younger ages that have needed care for all kinds of reasons, illness, accident, frailty. There are all kinds of ways that people need care. And if you don't believe me, if you say, well, Raymond Lavine is just saying this because it really doesn't exist. Anytime you go out in public in any kind of social situation, you're going to see people that need some level of care. It may be mobility issues. They may be in a wheelchair. They need canes to walk. It could be, younger people that you realize that there's somebody there that is helping them. I'm probably going longer answer than maybe what you asked, but what I wanted, I guess the message what I'm thinking is, you don't have to be old to think about caregiving. It could happen in any way, any place, any time, at any age, for lots of reasons.
And that's amazing. And
I don't want to make this depressing too. It's not like, it's woe or darkness and stuff. It's just, I think generally one way or another in our lives, no matter what our health condition is, everybody needs help. Everybody needs, assistance. Everybody needs to have somebody pay attention to them. I know I do.
Yeah. And I think one of the big misconceptions is that when we hear long-term care, we go right to what I'll say the old folks home.
True.
Right.
That's what people think.
The nursing home, right?
Right.
And of course, we're of the age where nursing homes were not the most cleanly and friendly place back in the mid to late 1900s. Right?
It's a true story. Yeah.
And so when you're young and you have a growing family, you're like, I don't need, I'm not going to be in a nursing home. But obviously that's a big misconception, right?
Interesting you asked it that way, because that's how a lot of people, that's how the plans first started out, as nursing home insurance. And exactly, it's like saying you might as well say spinach or broccoli. It may be good for you, but but it isn't the first thing that you want. And so that's how it, that's the perception. However, it's changed, is that most people want, if they have planned properly, can stay at home. And the plans, you're right, a lot of them were, nursing home or care center, but now it's comprehensive. You can still buy plans that are nursing home or care center, and you can buy plans that are only home centered. There are, and depending on the situation, there's sometimes, it is a good idea to just have a plan that has a home care benefit. Generally, I advise get a plan that's comprehensive, just the same as when you buy Medicare insurance, is that, you're not just going to say, gee, I really want the plan B because I'm only going to go to the doctor. I'm never going to go to the hospital. Get the comprehensive, whether it's a supplementary or a Medicare Advantage. And so I advise to either get the comprehensive if you really want the robust, and you can also stack it, and we have that where you can we just have as a home care plan. So you can mix and match, and you can do things. But generally, I say you don't know what you don't know.
Right.
So this is like car insurance. I like the comprehensive because I don't know if I'm going to have to deal with the uninsured. I don't know if I'm going to have to, what kind of collateral damage I'm going to have to deal with. So I'm cautious and I play it safe. I like it all because I don't know what I don't know.
That's it.
Is there a big cost difference between the in-home care long-term as opposed to the nursing home plans? And do you save by doing a comprehensive?
If you do, yes. I wouldn't recommend it because again, I don't mind risk, but I don't want to gamble because if I have a home plan and I really need to go to a care center, what are you going to do? Say, well, I got to stay home because that's what the plan will pay for. So that's where, I would rather spread the risk. And we can adjust the plan or the budget, that it will, no matter where you are, that you'll get better. At least you'll get some level of benefits. May not be 100%, but so what? So if it's 70%, it's better than saying, "Gee, I'm going to have to use my own cash flow or my assets." So it doesn't. You don't have to have everything, but sometimes something is better than nothing.
That's it.
True.
So, do us a favor and educate the audience on long-term care and why it matters.
Would you like my honest answer or my?
Yeah.
When it's about money, it is just about money, and and then the question is, if you need to replace something or you have a personal you have a caregiving issue, do you want to really use your own funds for whatever period of time? Are you willing to spend $200,000, $300,000? And it's about money. And if you think it isn't about your money and you have family and friends, it's their money. Because it's their lives and careers and family and retirement plans. So one way or another, when you say, "Gee, I'm a caregiver," even you may think that it's a noble cause, and it may be, but you still got to be paid for it. Volunteerism is not free because if you have to drive someplace, you're using gas money and you're using your own person. So as authentic as I can say, it's about money. If you have sufficient funds, then what happens? Then the caregiving becomes not a wonderful, experience because you're not well or there's some issue. I can't solve that. But what I can do is to say, if you need help, if you need care, if you want care at home, or if you need to go to a care center, that you have the infrastructure and the resources to help you to have the best life that you can. And I guarantee that it may not be the most pleasant life, but it will certainly be a worthwhile life. And it will solve three things that I think most people in any culture want. And it doesn't matter how learned you are. It doesn't matter how affluent you are. And those three things is everybody wants attention. I know I do. And the second thing is people don't want to feel invisible. You want to feel noticed. Don't believe me? Go to a restaurant in Chicago and have somebody, and you have to wait 10 or 15 minutes and think. It happens in Washington State too. It's just Chicago. You don't want to feel invisible. And the other thing that I think is most important in people's lives, especially if you're not well or whatever, is you feel vulnerable. Yeah. And most people, including me, do not like to feel vulnerable. So if you don't want to be in that condition, then have a plan in place that will help you with all these things, because you can still live a life. Don't believe me? When you go out and you're among people and they're in their walkers, wheelchairs, or somebody's next to them, just to make sure that they have mobility, they don't fall over, that you can still go out and you can live a life. There are a lot of things that you can do. The difference is that you need help, just like if you're in your child, your parents, they help you get dressed, and they, feed you, and then they, and then you go out into the world, into a public place. If you have people that are helping you with all these things, you can go out and do all these things. You can do social things. You can travel. My father is, towards the end of his life, as bad a shape as he was, and he was in really bad shape. They took cruises, and how could they do that? Because they had my mother made sure that there was care support in these various places, because she couldn't do all that stuff herself, but you can still do it. Don't believe me? When you get on or off a plane, you see a conga line of wheelchairs. So it's not like people that have mobility or some sort of issue aren't moving around. They just need help.
They need help, yeah. And we talked a little bit about it in the green room before the show, and I was telling you about my parents. And my parents, 30 some years ago now, purchased the long-term care plan, and it's amazing, right? And they have been told by their financial advisors and everything, like, whatever you do, don't let this go. This is amazing, and that was back again in the 1900s when they did that, and you said that there's been some changes, right? So I mean, it's a doozy. I mean, it is a nice plan for very, very low cost, and they're very, very fortunate. But now the industry has shifted a bit. What happened there that like those type of plans are not out there or suitable?
This is then, if you want to invite me back, this is another 2 or 3 shows to so let me summarize. 25, 30 years ago, there were a whole host of companies that were offering traditional kind of long-term care plans, and some of them had lifetime benefits, and assessment wasn't as stringent, and there were lower, and the premiums were quite reasonable. And I don't know, at 62 or 65, rather than having web meeting, you'd get a card in the mail and say, "Hi, come for a breakfast, or come for a lunch, or come for a dinner." I think they may still do that for Medicare benefits. I'm not sure.
They do.
Come to a meeting. And, that was sort of the generation of people that, owned insurance, or they also either for their parents realized that, they needed something. So it was a good deal. Also, let me just go forward. The reason that financial planners or wealth advisors, not always as advocate, but if somebody does own it, is that if what your parents did was they bought time. And what I mean by that is they bought time because the premiums, the health assessment, and hopefully they have a cost of living benefit where the pool of money is growing, is that they're at that age where, they want to hold on to it. Why? Because they're seeing all their friends and family and stuff, people that need it. So they might have said, do I really need it? Is they're saying this is valuable because at some point their health is going to change, where it's not going to be an active life, that they're going to need care, and they have a pool of money. They got to help them if they need care. So also, I think it puts you in a little bit better mental health to say, hey, if I need this, that I can hire licensed caregivers, or depending on the plan, I can hire friends and family or people who have this kind of thing to help me with my daily activities. Now, here's then a short thing of what the transition is. It happens, it happens in real estate. It happened in banking. Is that when the financial meltdown happened with the mortgage-backed guarantees in 2008 to 2010, it disrupted the actuarial values of traditional plans. And what they found was 3 things happened. One, that people were holding on to the plans, unlike life insurance. people were holding on to the plans. The second is they were using it for longer periods than they thought. That's also a misnomer. Everybody thinks that they're going to die quickly. Trust me, you don't always transition as fast as possible. Don't believe me? How long, if you have the light on your vehicle, how long do you go before you take it, to get it inspected? It might be a while. It doesn't say the light goes on, so therefore you got to your car stops. It doesn't.
2 weeks.
2 weeks.
2 weeks. 2 weeks.
Well, you're faster than others. There are a lot of jokes about that, but if you saw The Big Bang Theory, Penny always had the lights, and that became a running joke on that program. But anyway, and then the other is that the insurance companies had calculated through the actuaries what the return was. Well, if they needed a 5 or 6 or 7% return, and you have an interest rate of near zero, it affected the market because they had all these thousands of plans out there, and they were saying, how do we and people were using them, or it was a potential liability. What are we going to do? So they raised the rates, and also they made the health assessment a little bit more difficult. So the market got disrupted. And then for the rest of our lives, it'll be, everybody's going to say, well, the premiums went up. People cannot, let go of that. But look, my insurance premiums are going up, and my cost of living is going up in a lot of things. So what am I going to do? Get mad at it? But there's been a lot of people are writing about it. They all go back to the same thing. It's like, it's like carrying a grudge. Somebody said something mean to you, 10 years ago, and you just can't let it go. And so, there's been this, feeling and saying, well, it's too expensive. That's always, it's too expensive. Well, what's too expensive? The premiums are too expensive. Well, we can do just that. But I'll tell you what isn't going down is caregiving expenses. The cost of care, the inflation of cost of care is going up. So here's the financial thing. Would you rather put in a few $100s a month that you might get several $100,000 or $300,000 or $1 million? Would you rather do that, or do you already have in your cash flow or your asset that you want to spend $500,000? What would you rather do? What's the better way to have a reserve asset to pay for something that's very likely to happen?
Yeah.
And so, and the other thing too, I'll tell you something else that annoyed people, is that getting the health, going through the underwriting process. Sometimes it could take months and months, and that annoyed people. It's gotten a lot more efficient. Also, the plans have become a lot more stable, that they've calculated all these horrible things that happen, where it's not unlikely, but it's not probable that ever again, if you own a traditional plan, that there would ever be a premium increase, because the way that they calculate. Now, the other way you can go is you can buy a life insurance that has a long-term care rider, and then the premiums will never go up. It's guaranteed. So the way that I approach it with people is, it also depends on the state. Not every state has always the same plans. It's not uniform. The state insurance commissioner decides what plans are approved. Just the same as not all Medicare plans are the same in each state. One of the things that I'm not happy about, and here's the good news: it's not your fault. What I'm not happy about is that I think that all states should offer short-term care plans, because there's some great plans. There's Aetna, there's Wellbe, there's Manhattan Life, Omniflex, and there's some, they're really good plans that, can really help a lot of people, even if they have, because the health assessment isn't as stringent, and the premiums are very reasonable. The point that I'm going is, if we talk about we don't want as many people to be on Medicaid, then why doesn't every state offer something, even if you have a limited budget, that at least you can get something. And I've asked everybody and the trade groups, and nobody other than all the insurance commissioners are bums and this and that. It's well, if you're a lobbying group, why don't you lobby for something that it's a good idea, especially if each state is saying we don't want as many people on Medicaid. Well, then let's do something about it, not complain.
Right. And I like what you said earlier about the pool of money.
I mean, I said something that you liked. My God,
yeah, I did. You did. My grandfather, ended up getting dementia, and then which turned into Alzheimer's, and he needed long-term care. And it came to the point where my mom and her brother had to sell the house to pay for it, and then ran through basically, quote unquote, their inheritance, right? Because it's long-term care. And he hadn't planned for it, and now we're seeing more and more young people, right? Movie stars, athletes that are coming down with ALS and Parkinson's, and just things that
that you need a long-term care for,
that you need a plan for. And so when is usually a good time, do you recommend? Is it in their 20s? Is it in their 50s? When is a good time to put that plan together?
When it used to be that plans, you could get a plan at 18. Now it's really plans are really designed more for people that are older. There's some plans you can't even look at until you're in your 40s.
Yeah.
However, if you have a long-term care plan that's a benefit for a company, then you can get it at almost any age, and that's actually a good place. I would like to see, and I advocate that companies offer long-term care plans to their employees, and that either they will pay the entire premium or some portion of the premium. Get them in the habit of owning it, because it might be $35, $40 a month, which look, if you need every amount of money to live, it could be a struggle. But sometimes are there things that you can give up because the plan can be portable. So I would advocate that companies offer a plan, and that if a employee is smart enough to say I'll keep it because they're portable. Do you realize if you're 25 and you have a $2,000 a month plan that has a cost of living, what that plan is going to be worth in 50 years? Right. I mean, you might never need to buy it. So you can get it very, very young. Now, here's the authentic thing is, if you have no budget, then it really is, it's impossible to get it if all your funds are just going for your living. But if you have some disposable income, it's the best time for two reasons. The first is in most plans there's some level of health assessment, meaning how's your health. So the younger you are, the better health. Then also that you might get a better rating. The second is that the premiums are lower because you're buying time. What do I mean by buying time? If you go to the nursery, you'll see a plant that costs $1.50 because that's the young plant. But if you go and you see the same tree and it costs now $500, what's the difference? Well, the difference is same plant, same tree. But one you're buying a pot, the other is you're buying a tree, and there's you're buying time. And so the younger you are, the better health you are, maybe the better rating and your health assessment, that you're more likely you're also more likely to have a range of plans. Because sometimes, depending on your health, it might limit the kinds of plans that are available to you. Just as, look, it's the same as, in real estate. Do you want to buy a home in Bloomington Hills, or do you want to buy it, based on your budget, in some other part of town. It's not a character flaw. It's just what do you where can you buy real estate?
Right. Well, question I have is, what about somebody who's couples that are already on Medicare programs and they haven't gotten a long-term care program yet? Obviously, that's going to get where it's going to get pretty expensive. What are the solutions for that, for them to still be able to get some kind of a plan?
Interesting you asked that. There are a variety of ways. First, people can look at a reverse mortgage. There are good reasons they can do a reverse mortgage. The other is, never sell your life insurance. Never let your life insurance lapse or trade it in. If at some point you need and you don't have another plan, sell your life insurance to a life settlement person, even whether it's term and it's convertible. If you have a regular, sell it, and that will get you money. So don't let it lapse. Sell it, and if they need help with that, I have colleagues that do life settlement. There are other ways that you can do it. If you own life insurance, if you own a non-qualified annuity, if you have assets not directly needed towards your retirement, that we can transfer it over to a long-term care plan. And there's some that you almost need no health, and you can still get a long-term care benefits. What it means is you're transferring money from one asset to something else. Most of the time, it's 1099. Is there are no capital gains or taxes involved. So you're leveraging your money into an annuity that has a long-term care plan. It's sort of more difficult, it's more involved, but the thing is you're transferring assets and you're leveraging it. So for every dollar you put in, you might get $2 or $3. Is it worth it? Hell yeah, because what you're doing is you're going to use the money anyway for your care. Why not transfer it and get more benefits? But there's more. People say, well, yeah, but if I do that, it'll go to money heaven. No, it won't, because if you don't use all of it and there's still cash value in the annuity, if you die before you use it all or need it all, that money will go to a beneficiary. So, it's not one and done. It doesn't go to money heaven directly. Or that the insurance company, isn't taking your money. If it's planned properly, then if you need it all, you need it all. But if you don't, then it will go to a beneficiary. So somebody will get the money.
Yeah, and what I love about Raymond, I've only known him for a brief minute now, but it seems like the guy that will sit down and have a conversation with you, educate you, and not your car salesman. No offense, car salesman. I'm just saying that, want to help guide you in your decision rather than try to, jam pack sales down you, which is awesome. But yeah, right over here, we got Lavine LTC Benefits. If you look right there's a QR code. You can hit that. It'll take you right to his website, which is nice. And I think they can help out.
Absolutely.
We're getting right to the back end of this, Raymond. Is there anything else you want to?
This is too much fun. Let's go longer. No, I'm just kidding.
Well, maybe part 2. Is there anything else that you want to put out there, maybe that we didn't cover real quick, or any other thought that you can put out there? Because I don't think it's a heavy topic anymore. I think people understand that there's a strong need for it, and I love that you brought up that it really, any age.
Well, and it's something that does need to be talked about more. And people don't talk about it enough. So I would love to do a part 2. I think it'd be great.
Yeah.
Well, there are a couple of things. First of all, I'll give you my quote. Hope is not a plan. And the reason I say that is because, you always hope that, something won't happen. But what happens if it does? That's why I have AAA. That's why I have a membership in Costco, just in case, I need paper towels. Or what's really important to me at Costco is the $1.50 hot dog.
Hot dog. You can't beat it. Yeah.
However, I'm annoyed.
Enough of those you'll need long-term care, though.
Yeah.
Well, that's true too. The thing that I'm really annoyed with the Costco is they used to have these chocolate bars. And you could also dip it in chocolate, and then you had the nuts for $1.50, and they eliminated that. But I used to have the hot dog and the chocolate bar. So now I'm just limited to the $1.50 hot dog. But the thing is this, just like doing your taxes or a lot of things that you don't like to do. There's some things that are really necessary. Call it preventative measures. Look, I'm so old. I remember, when call boxes first came in, and people loved the idea of saying, "Hey, what happens if I'm stuck someplace? It's nice to have a call box." Now, obviously, we don't need that because we have smartphones. The point is that even if you don't think that you want it, even if you think you don't need it, have the conversation. And the conversation is not about long-term care benefits. What's the conversation? The conversation is just like in estate planning, or what restaurant you want to go to. Why do you plan for restaurant? Because you want to eat. It's what when I do, it's what I want to eat. Or if I want to go on vacation, I plan for, because I want to go on vacation. I want to get out of town. Assuming the plane actually leaves, but that's another story. But the point is that you may not like the idea of thinking about caregiving, but what you do want to do is to say, if I needed caregiving, if I'm not healthy, I want health insurance. Is that I want a plan in place, whatever it may be, so that in the expected or unexpected, that I have access to people that will help me with hopefully stay at home with my daily activities. A real quick thing. Supposing I say to you fellows, you can't. The state of Illinois will not renew your driver's license. We're not going to let you drive because you have whatever thing. What would you do? And have you thought?
Iowa.
Yeah.
Huh? Well, I thought, I'm hoping I live long enough that they have the driverless cars. Then I won't care.
Right. That doesn't matter.
If I couldn't, I'd say, well, can I depend on my family, or do I have to call my friends? What am I going to do if I can't drive? The reason I had to go in person for the first time in years to update my driver's license. But I thought about it. What would happen if they say we're not going to give you a driver's license? I mean, so where I'm going with this is that I'd rather have some plan in place just for the unexpected. And caregiving can be, unexpected, or it can be, hey, at certain times, the morning lights go on where you transition from an active lifestyle and health to you have some sort of health issue. It could be accident, it could be frailty, it could be some sort of illness. You were talking about, ALS. There's diabetes, there's, cognitive issues. I mean, there are all kinds of things that have neurological issues. A lot of people have neurological issues or getting neurological issues. So at some point you are, that you're going to need care. So the thing is, I'm not saying, it's a fun thing to do. But the way I do it is I use tactical empathy, meaning I ask questions. One of the first questions I ask is, what do you want if you need a caregiver, what do you want it to do? Some people haven't thought about it that way. Not like, hi, do you want to, we got a special on long-term care plan. It's, it's really important. There's no better investment that any human being can make than in themselves. I mean, I invest in myself, and I like investing in myself. I think I'm a worthwhile investment. And
That's
so
it.
I think with, things that you do that help yourself and your family, I think Raymond Lavine thinks it's a good investment.
Awesome. Of course, Raymond Lavine, you can find it www.lavineltcins.com. Yep, just check that QR code right there. I'll take you right there, answer all those questions for you, which is absolutely fantastic. Raymond, thanks for joining us. Appreciate your time. I know you're busy, but man, we're going to have to get Nick to reach back out to you, maybe get you in for a part 2, because there's a lot to unwrap.
For sure.
But hey, listen,
It'll be my pleasure. Thank you, Phil. I really had fun, and yes, if I'm invited back, I will return.
Awesome.
That's great.
Well, folks, as we always say, listen global, but let's talk local.
Every story's worth a little bliss. From the heart of the town to the open air, let's talk local, we're taking you there. 216 Creative Studios, where the magic starts. Local businesses, their real work of arts. From the